Welcome back to Iraqi Dinar Hub, where we stay plugged into everything happening in the financial world that could impact your holdings and the broader currency community. Today we read digging into a developing story that's getting a lot of attention both inside the banking world and from dinar watchers everywhere. There's a major narrative unfolding behind the scenes at one of the biggest U.S. financial institutions, Chase Bank, and the chatter ties directly into big updates coming in 2025. This isn't your standard policy refresh or a minor update to terms and services. What's circulating now suggests a major shift in how Chase plans to handle foreign currency in the year ahead. And for anyone who's been tracking the Iraqi dinar story, this is being treated as a potentially important piece of the bigger puzzle, hinting that some large players may be bracing for a totally different world of international exchange. Let's start with the core of the talk, the introduction of a tier-based structure for handling foreign currency exchanges. Reports from various banking circles and branch-level conversations suggest that Chase is getting ready to move away from the simple one-size-fits-all foreign exchange model they've used for years. Instead, everything points to new customer tiers being created, with different daily limits depending on your relationship with the bank. This kind of structure usually only shows up when a bank is expecting a wave of exchange traffic and wants to keep things controlled. By splitting clients into groups, they can manage liquidity and security more effectively, preventing the system from getting jammed by a sudden wave of exchange requests, especially if something major changes with foreign currency rates. As we look deeper into the specifics of these rumored tiers, the first thing that stands out is the daily cap for regular banking customers. The numbers being tossed around indicate a limit in the ballpark of about $250,000 for standard account holders. That's still a huge amount for typical customers, but the real spotlight is on the upper tiers. For Chase private clients and premium account holders, those exchange limits could increase dramatically, possibly up to $1 million or more, depending on verification. This tier difference tells a clear story. Chase seems to be building an exchange system engineered to handle large volume transactions for individuals with established profiles. If a revaluation or major rate adjustment takes place, the bank wants to be ready to move money efficiently for high-tier clients while keeping everything structured and secure. But the exchange limits aren't even the biggest part of this new policy package. The major shift seems to be in how seriously Chase plans to enforce identity checks and compliance. This isn't just showing your ID at the window anymore. The buzz suggests Chase will require deep verification layers, including upgraded ID scans, account verification, and possibly secondary reviews by compliance teams for large exchanges. The goal is straightforward: to lock down the entire chain of custody. In a high-value environment, banks want to eliminate any chances of fraud, fake identities, or money laundering. And they want to do it before the money ever hits the system. Part of this compliance push includes how the bank handles the physical currency itself. This does more than just keep counterfeit bills out of the system. It creates a clear digital record linking the exchange to the exact person who brought the currency in. Once a note is scanned and verified, it essentially becomes part of a digital audit trail. That's the kind of infrastructure banks put in place when they expect a flood of transactions from a specific source. One of the biggest operational shifts supposedly coming is the move toward appointment-only exchanges for major transactions. The idea of walking into a branch unannounced with a stack of currency might be disappearing quickly under these new rules. This helps Chase control traffic at the branch, make sure they have the liquidity ready, and guarantees a secure environment. It keeps things organized, avoids long lines, reduces the safety risk of people showing up with significant amounts of currency. And with an appointment system in place, Chase can prioritize customers who already have relationships with the bank. This ties into another theme floating around these updates: the importance of having an established account. The assumption is that private clients and top-tier customers will get priority access to exchange appointments. It's not just VIP treatment, it's practical. This has led many in the Dinar community to think about whether their current banking setup is ready for what may be coming. The timing of all this is raising eyebrows too. Chase policy changes are supposedly taking effect right when Iraq is working on major reforms of its own, switching to digital payment systems, modernizing banking laws, and aligning budgets with international frameworks. When a major U.S. bank updates its foreign exchange procedures, at the exact moment Iraq is restructuring its monetary system, it feels coordinated, or at least synchronized. It suggests the banking sector isn't acting randomly, they prepping for a shift that could be connected to larger global changes already in motion. Then there's the talk around staff training. Several reports from insiders and retail branch employees claim that certain Chase locations are running new training modules specifically focused on handling large foreign currency transactions. Some even mention codes or procedures directly referencing the Dinar and updated compliance rules. If these reports are legit, it means these policy changes aren't theoretical. They're being implemented at the human level. Tellers, managers, and compliance staff are being prepared for new workflows, which is a strong sign that the bank expects these situations to become real. Another big component of the 2025 changes is the rumored rollout of digital conversion pathways. Instead of exchanging foreign currency and walking out with a cashier's check or cash, customers may be able to convert directly into digital US dollar wallets or international account types. This lines up with global trends toward digital banking and cashless systems. It saves the bank the trouble of dealing with massive amounts of physical money and plugs the exchange directly into the digital system. This is exactly the kind of setup global financial institutions have been pushing for, especially as more countries modernize. Linked to this is something being described as a liquidity assurance window. In international finance, that's blazing fast. Large settlements can take days or even weeks. A 48-hour turnaround suggests Chase has cleared pathways with clearinghouses or possibly the U.S. Treasury. Looking at Chase compared to other banks, the narrative suggests they're resetting up to be the main banking institution for public or retail level exchanges. If true, this division makes sense in a large-scale event. Different banks can handle different levels of volume based on their infrastructure and client base. It paints a picture of a coordinated rather than isolated approach within the banking sector. As far as timing goes, the updates are reportedly set to activate on January 1st, 2025. But corporate policy dates usually come after months of prep behind the scenes. According to insiders, training and simulations are happening right now in late 2024 to ensure everything is in place by the time the new year hits. And interestingly, this timeline matches Iraq's economic planning as well. When the timelines of multiple institutions line up this cleanly, it tends to mean something is in motion. For individual currency holders, this is the moment to get personally organized. The biggest takeaway from these updates is that documentation is going to matter more than ever. If banks are tightening verification standards, individuals need to have proper IDs, updated information, and ideally some form of proof origin for their currency. If you have a dormant account, reactivating it and using it regularly could help prevent problems when you eventually attempt a large transaction. For holders, adopting the same calm, structured approach is important. This is a reminder to avoid unofficial groups or street exchange offers that promise shortcuts.